The big question, what's the next big thing? With stocks and cryptos like VAPE and DOGINME making headlines, FOMO is real. Today we'll break down some of the most talked about names, small cap stocks, DeFi tokens and more, so you can see what's really behind the hype. We'll cover companies like CEA Industries, Celcuity, Kyber Network, Home Token and others you've seen trending. The goal isn't to tell you what to buy, but to give you a clear, unbiased look at the fundamentals, risks and opportunities. This is not financial advice, just a starting point for your own research. Let's dive in. First up, VAPE, CEA Industries. Despite the ticker, they're not making vape pens. They build high-tech environments for growing crops, especially cannabis. Think of them as the picks and shovels of the cannabis industry, selling the tools, not the product. If cannabis grows, so should demand for CEA's services. But recent stock spikes are more about hype than fundamentals. As a low-float small-cap stock, vape is extremely volatile. Big gains, big losses, often on little news. Financials show inconsistent revenue and no profits yet. They're burning cash to grab market share, but profitability is a big question mark. The entire cannabis sector is volatile, driven by regulatory news. Federal legalization could be a huge catalyst or a major risk if delayed. The opportunity. If CEA becomes a leader in controlled agriculture, there's growth potential even beyond cannabis. But it's a high-risk, high-reward play tied to a volatile industry and market sentiment. This isn't for the faint of heart. Due diligence is a must. If you're considering vape, ask yourself, do you believe in their long-term vision and can you stomach the swings? The upside is real, but so is the risk of losing your investment. Don't let hype drive your decision. Look at the numbers. Regulatory changes could make or break this stock. Diversification into other crops could help, but it's not guaranteed. Watch for financial health and cash runway. Remember, small caps can move fast, both ways. Only invest what you can afford to lose. Let's move on. Next, VWAV Holdings, VWAV. This Malaysian tech company offers IT consulting, software and cybersecurity. Southeast Asia's tech sector is booming and VWAV wants a piece of it. But they're a small fish in a big pond. Recent price spikes? Mostly speculation, not business breakthroughs. The IT space is crowded. Does VWAV have a unique edge or just another service provider? No major partnerships or standout products announced, so why the hype? Financially, small tech firms often burn cash fast. Watch for share dilution and cash runway. The opportunity? If they carve out a niche and show real growth, there's upside. But competition is fierce and volatility is high. Don't chase the pump, look for substance. Without a clear moat, this is a risky bet. Due diligence is critical. Let's keep going. Now, Celcuity, CLC, a clinical stage biotech focused on personalized cancer therapies. Their CELC platform analyzes tumor cells to match patients with the most effective treatments, a big leap for oncology. If successful, this could revolutionize cancer care. But biotech is all or nothing. One trial can make or break the company. No revenue yet, they're burning cash on R&D and trials. Their future depends on raising more capital and positive trial results. Partnerships with big pharma could validate their tech and provide funding. Risks? The science could fail, trials could disappoint, or regulatory hurdles could stall progress. Even with approval, adoption by doctors and insurers is another challenge. The upside. If CELC's platform works, returns could be huge and lives could be saved. But the risk of going to zero is real. Only invest if you're comfortable with high risk and long timelines. Watch for trial updates and partnerships. This is a moonshot, not a safe bet. Know what you're getting into. Biotech is not for everyone. On to the next. Profusa. PFSA is developing under-the-skin biosensors for real-time body chemistry monitoring. Think beyond glucose. Their tech could track oxygen, lactate and more, with applications from healthcare to military. The hydrogel sensor is tiny, flexible, and works with an external reader, less invasive than traditional implants. The market is huge, but so are the hurdles. FDA approval for implantable devices is slow, expensive, and uncertain. Competition is fierce. Giants like Apple and Dexcom are in the game. Profusa is pre-revenue and burning cash. Success depends on regulatory approval, beating bigger rivals and commercializing the tech. Risks, clinical setbacks, regulatory delays, and being outpaced by better-funded competitors. The opportunity, a game changer for health monitoring if they pull it off. But it's a long shot with high risk. only for those who believe in the tech and the team. Watch for trial results and regulatory news. This is speculative. Don't bet the farm. The future is exciting, but uncertain. Do your homework. Let's switch gears. Now, Kyber Network, KNC, a DeFi protocol enabling instant crypto swaps without centralized exchanges. It's a liquidity hub for DeFi, powering decentralized exchanges and payment services. KNC is a governance token. Holders vote on upgrades and can earn a share of trading fees. Price swings are wild, driven by crypto sentiment and DeFi demand. The DEX space is crowded. Uniswap, SushiSwap, and Curve are major competitors. Kyber must innovate to stay relevant and attract users. Security is a big risk. A 2023 hack cost users millions and hurt trust. The opportunity, DeFi growth, and Kyber's role as key infrastructure. But competition and security risks are major red flags. Investing in KNC is a bet on the team's ability to recover and innovate. Watch for protocol upgrades and user growth. DeFi is high risk, high reward. Only invest what you can afford to lose. Let's keep moving. DOGINME is a pure meme coin. No tech, no business model, just community and hype. Born from a viral meme, its value is driven by social buzz and speculation. The only feature is the meme itself and the community's energy. Prices can skyrocket or collapse to zero overnight. There's no utility, no fundamentals, and no safety net. Rug pulls are a real risk. Anonymous teams can disappear with your money. Investing here is gambling, not investing. If you play, use only what you're willing to lose. Think of it as entertainment, not a strategy. The odds are against you. Don't get caught up in the hype. Meme coins are fun but dangerous. Stay cautious. Next up, Cryptex Finance, CTX, a DeFi protocol for decentralized synthetic assets. Their flagship TCAP tracks the total crypto market cap in a single token. The idea? Make broad market exposure simple and on-chain. CTX is the governance token. Holders vote on new assets and protocol changes. Value depends on TCAP adoption, DeFi market health, and governance demand. The big challenge, the Oracle problem. Reliable price feeds are critical, and failures can be catastrophic. Competition is tough. Synthetics and others have a head start. Cryptex must differentiate with unique assets or better tech. The opportunity, tokenizing any asset for DeFi trading. Risks, technical hurdles, competition, and DeFi volatility. Success depends on building a robust ecosystem and solving the Oracle issue. High risk, high reward. Watch for adoption and new product launches. Let's wrap up. Home. Token aims to fractionalize real estate ownership using blockchain. The vision: buy a piece of property for a fraction of the cost, making real estate investing accessible to all. The platform would let owners tokenize assets and investors trade shares, with Home as the utility token. Real estate is huge but illiquid. Tokenization could be revolutionary. The challenge: regulation. Real estate is legally complex with different rules everywhere. Technical and operational hurdles are massive. Valuing, managing, and distributing income for tokenized properties isn't easy. Partnerships with real estate and legal firms are critical. No credible partners? Big red flag. The opportunity is massive, but so is the risk of failure. This is a long-term speculative bet on the team's ability to navigate legal and logistical minefields. Only invest if you're ready for a bumpy ride. Watch for regulatory progress and real-world deals. Let's close out. That's our rundown of today's hottest stocks and cryptos, from VAPE and Celcuity to Kyber and Home Token. Each offers big opportunities and big risks. The hype is loud, but reality is complex. Look past the noise, focus on fundamentals, and be honest about your risk tolerance. If you found this helpful, hit like and subscribe for more. Share your thoughts in the comments. Let's learn together. Remember, this is not financial advice. Always do your own research. Thanks for watching. See you next time.